In this video, we're going to be looking at double tops and bottoms, and some of the objectives discussed in this video include recognizing such double tops and bottoms, identifying confirmation of the formation, and thus calculating price targets from a thing that we may have covered before, if you're familiar with already, by the name of equality projection. So, the double top is a bearish reversal pattern. It has two consecutive peaks which form at around the same price level. There is a degree of subjectivity here. If one of the peaks is marginally higher than the other, that's okay. It can probably still be classed as a double top, but there's no exact rule as to how close the peaks have to be in terms of price level. So it's up to you to make a judgment call there. And it's really important to know where the pattern is completed. For a double top, the pattern is completed when price falls below the trough between two peaks. And we'll see this is the trough between two peaks. Once the price falls below that trough between two peaks, you can see you have a completion of the double top pattern. So that means that even if the two peaks form next to each other, if price doesn't fall below that completion level, there is no double top pattern. So that means if the price bounces from here and holds this level and continues upwards or stays above this validation level, essentially, if it breaks below, that's where the pattern completes. If it stays above, then you don't have a double top formation until the opposite has occurred. If the price rallies without taking that low, the pattern did not fail because the pattern never existed to begin with. And the pattern only exists if it crosses that completion level. Remember that. And an interesting fact to add on top is that volume will usually be lower on the second peak and starts to expand as price breaks to the downside, which essentially means here you can see you have a bit of lower volume here. And as the price breaks below this completion level and you have the double top formation confirmed, that's when you'd see a lot of sell side volume. So selling volume, you'd expect to see a big red bar when this completion occurs. So let's have an example here. Price targets can be derived from double top patterns, and we're going to go through an example to demonstrate how. So to start with, we have two peaks which form, and that means that we're looking to that completion level here. We can see that's the bottom area to see if it turns into a double top. You've got two peaks and you've got the completion area. And if we go to the next animation, we should be able to find, oh, there we go. And the next animation, we can see that the price crosses this completion level, which means that the double top is confirmed. Here we have a bearish bias and we can thus find targets. You can see this is the completion level. The price breaks below. That for us is a good indicator that this double top has occurred. So to find the minimum target, you would start by measuring the vertical distance between the highs of the peaks and the pattern completion level. And then you would project that same distance down from the pattern completion level to obtain the minimum one-to-one or equality projection target. So we'll show an example here. There we go. So that's the one-to-one, the height and the difference between the height of the peaks and the bottom area of this pattern completion level. And you just project it on the same one-to-one basis downwards, and then you can get your price target from there. You can see that the market did decline here. If we get the next animation up, it declined to the one-to-one target where you found a good deal of support. And we must note that it's possible to obtain targets even further from the tops by projecting some of the other multiples. So maybe a 2-to-1 measured move or a 3-to-1 measured move. But hey, it's important to also note that when the pattern fails, if after a pattern was completed, the price rallied instead of declined. So let's just say the pattern was completed, price rallies right above this pattern completion level. It is important to remember that the pattern is considered to have failed when that price exceeds the highs of the top. So let's say this point you break above, then the entire pattern has invalidated. But remember that the pattern can only fail if the pattern completes in the first place. So you can see now the pattern's completed. What if price broke above that invalidation level? Then it would fail. So a double bottom is the exact opposite of a double top, and it's a bullish reversal pattern occurring when two consecutive troughs form at the same price level. The pattern here is only complete when the price exceeds the peak which forms between the two troughs. And it's important to note here that volume will usually be lower before, and then the volume would expand as the price rallies and breaks out. So here you'd have less volume on the second trough, and you would see volume expand as you break above that pattern completion level. So here we have a double bottom with these two troughs, one here and one here, and the confirmation level for the pattern is at the high of the peak between the troughs. This is the high of the peak between the troughs, and thus the completion level. So when the price breaks out of that level, the pattern gets confirmed, and we can apply the one-to-one projection technique, and the vertical distance between the lows and the confirmation level is thus projected upwards from the breakout level to obtain the price target. So you go from here to here, and that difference is projected upwards. And it's interesting to see that here the rally did hit the target. And again, higher targets can be derived by projecting a larger move multiple of that measured move. So like a 2-to-1 or a 3-to-1. But let's just have the 1-to-1 situation here, and we can plot it. You have confirmation, a breakout above that completion level, confirming a double bottom pattern, and then you look to target that higher level using a 1-to-1 equality projection. The pattern here would have failed if after the completion it declined below the trough. So let's just say price breaks out, then declines below these two troughs, then the pattern would fail. So to conclude, double tops and bottoms occur frequently in financial markets and provide good opportunities because clear price targets can be derived. A common mistake is to think that a double top or bottom is present before the pattern has actually been confirmed. So technically, no such pattern exists until there is a breakout of the confirmation level, which is where entry orders would typically be placed for trades based off this pattern.